Welcome to the Capital News. I'm your host, Alex Karitis. Today is Wednesday, November 18th, 2020. Thank you so much for joining me. Title of today's podcast, The Headline Economy. Yesterday's podcast was the zombie economy. Today it's the headline economy. Both are true because we just live in a market-driven world that is just, it's all predicated on headlines. Not off of the fundamentals. Clearly not off of the valuations, which basically every single one of them, maybe with the exception of a couple, and I mean a couple, are at all-time highs. This does not typically bode well for future positive returns with respect to the stock market. But the bubble continues, because the narrative has to continue. The narrative being that everything is A-OK. That we are in the midst of a miraculous V-shaped recovery. That we were experiencing the greatest economy ever prior to COVID-19. All of this is nonsense. It's just flat out not true. I spent the entirety of 2019 proving this on a near daily basis. Predicting a recession in 2020, and we got one. This was on its way, folks, before the onset of COVID-19. Don't forget, we had that 5% contraction in the first quarter of this year. We didn't really start implementing all those tight restrictions and lockdowns until late into the first quarter. This economy was buckling. Sure, if you want to run trillion-dollar deficits, again, before COVID-19, you're going to have a good time. You're going to kick some cans down the road. Get rid of some regulations, same effect. And I'm all for that. I'm all for tax cuts. I want to get rid of the federal income tax. I want much fewer regulations. But you also have to cut spending if you're going to cut taxes. We didn't do that. We don't do that. So you're forgetting the other side of the equation, and what that ends up generating are large deficits. This one just happens to be trillion, but that's the era in which we find ourselves. Again, millions to billions, billions to trillions. This is out of control, it's unsustainable, and it's unhealthy. And the only way this stuff is going to get paid back is through default, inflation, and perhaps hyperinflation, which you can make the argument that if it comes to hyperinflation, that in and of itself is a form of default. And that, I think, is where we are headed. Most definitely inflation and stagflation, which just basically is the combination of inflation with a stagnant economy. As far as I'm concerned, we're already there. The question is, does this first world banana republic we call the United States of America, does it really turn into a full-blown banana republic and hyperinflate our debts away? History says it can happen. A lot of people like to make the argument that these types of things that happen in third world countries or in developing markets, that chaos, that insanity, that could never happen here in the United States of America. Oh, no? A lot of people didn't foresee a lot of the recent protests and riots taking place. A lot of people never thought that our debt would get to this level, that something would have happened prior that would have brought us down, buckling our knees. Well, we've been able to maintain this insanity for a lot longer than a lot of people had anticipated. But everything has its limits, everything has its breaking point. I believe we're getting close to that point. I could be wrong, of course. Many people before me have made this argument, and here we are. But I would simply point to what I find to be perfectly evident is the decay and decline that we are experiencing in this country and in many, many others around the world. Don't forget those weakest links that have already broken or are on the verge of breaking. Venezuela, Argentina, Iran, Lebanon, Syria, Turkey, as one-offs, it might not be that big of a deal. They're not that big of a contributing factor to global GDP. Maybe their populations aren't that large and significant. No major disruptions to any type of supply chains, etc., etc. But when you start adding them all up together, you have this snowballing effect that is occurring, and the weakest links always break first. These problems have not gone away. They're only going to get worse, unfortunately. The question is, to what degree and what triggers it? And does there even need to be any other trigger? Or is this just going to be the natural ebb and flow of a business cycle, a credit cycle, a political cycle? So many cycles coming to a head right now. These are very interesting times to be alive. I mean, this is historic stuff. Make no mistake about it. But the headline economy, the stock market, just loves a good headline. Basically, throughout the, let's call it like the fourth quarter of 2018 and through the entirety of 2019, we were dealing with U.S.-China trade talks. I mean, that was almost a daily occurrence. Made me sick to my stomach. Whether it was the President of the United States, Thunder Thumbs himself, taking to Twitter, if there was a stock market sell-off, making progress with U.S.-China trade talks. Stay tuned. If it wasn't Thunder Thumbs, it was Treasury Secretary Mnuchin. If it wasn't him, it was Peter Navarro. If it wasn't him, it was Wilbur Ross. If it wasn't him, it was Larry Kudlow, etc., etc., etc. Sickening. Yet the markets bought it. And there was no great, fabulous, fantastic U.S.-China trade deal. We got a phase one. I don't know what that means. I don't know how many phases there's going to be. Apparently, we're done with them. And with the COVID-19, the China plague, whatever you want to call it, I don't care. The President of the United States, at least for the time being, is not happy with China and doesn't look to be working with them on any type of phase two, etc. It'll be interesting to see how President-elect Joe Biden tackles this issue. Because you can't simply ignore the world's second largest economy. China lifted the global economy out of the depths of the great financial crisis because they just continued to consume virtually every raw material under the sun, infrastructure project after infrastructure project, housing development, buildings, everything. Everything helped to carry the global economy out. Make no mistake about it, this does not mean that the Chinese economy and political system are stable, because I do not think that they are. I think they're con artists to a large degree. I think it's a lot of smoke and mirrors. But, we do the same stuff. I just think they're taking it to a new level over in China. And, of course, their political system makes it a lot easier to streamline things. There can be some pros and cons to that. Here, our government works very slow. That's by design, because our framers want this country, our government, to be very small. Of course, it's not, but that's by design. That's what it's supposed to be. It's supposed to be limited in its powers. Our government, our politicians are supposed to be very thoughtful and contemplative on what laws they are going to pass and implement. Of course, that doesn't happen either. But you get my understanding. It is a sausage-making process to get legislation through Congress on the president's desk signed into law. The Chinese Communist Party, they can just push things through. Sure, they can have their ceremonial sessions, but nonetheless, it can be very much streamlined. Again, pros and cons to both. But I prefer our system. Just saying. Then we move into the era of COVID-19. And all hell's breaking loose. Oh, don't worry. Don't worry. Mommy, Daddy, government, and Federal Reserve are here to save us. Passage of the Nobody Cares Act. Throwing trillions of dollars into the system. The alphabet soup of emergency facilities that reside within the Federal Reserve. And now there is discussion by the chairman of the Federal Reserve himself, Jay Powell, making it known that he thinks that some of these emergency facilities should be extended. Why would he think that? We're on the verge of a miraculous vaccine. Maybe miraculous therapeutics. What's the problem? Headline unemployment's at 6.9%. Much, much lower than where we were earlier this year. Initial jobless claims are trending lower. No longer at 900,000, 800,000. Now we're around 700,000. Of course, that data is going to come out tomorrow, so we'll see what's going on there. Inflation is in check. Housing prices are going up. House building is increasing. What's going on? What's the issue? Why do emergency facilities need to be extended? It's not making sense. And then for the past several months, they've been promising us more quote-unquote stimulus. I'm against all of this. But this is what they're doing. This is what they've been talking about. This has been the narrative. This has been part of the headline economy. These are the headlines. Thunder Thumbs, Crazy Nancy, Turkey Neck McConnell, all of them come out and say some stuff. Markets love it. Oh, we're talking. Mnuchin, oh, we're talking. We're going to have another conversation in 45 minutes, and we're going to talk for about 32 minutes and 32 seconds. And how'd that talk go? Well, it was okay. We're going to talk again tomorrow. Oh, well, it's still during the trading session, so stocks can rally. This is sickening. This is worse than the Twilight Zone. And then, of course, if you don't want to bring in the trade talks, stimulus talks are running low. Well, let's talk about a vaccine. We only have umpteen companies out there who are trying to create a vaccine, so clearly we can play musical chairs with these idiots too. Moderna, Pfizer, Johnson & Johnson, GSK, AstraZeneca, Merck, any of them, and countless others that are out there attempting to do this. Godspeed, may they do it. I'm not taking it. Good luck to you. But that's what they did last week with Pfizer on Vaccine Monday, 90% effective. This Monday, Moderna, 94.5% effective. And then, of course, today, round number 2 for Pfizer. Back in the fold, 95% effective. They take us for idiots. This is ridiculous. And, of course, the executives of both of these companies, Pfizer and Moderna, sell their shares right before the verge of receiving emergency use authorization, putting this thing into production, selling them to governments all over the world for hundreds of millions, if not billions of people to use them. Oh, I know, I'm just going to pocket $5-6 million when potentially, if this thing really works like they are claiming it does, I mean 95%, that seems pretty good to me. Oh no, we're abandoning ship, we're abandoning ship. That 5 million could turn into 50, 60, 70, who knows? That's a little shady to me. You got to ask yourself a question. What do they know that we don't know? But 95%? How do we know they're not rounding up? Maybe they're 94.5% too, but they decided to round up. How do we know? Just got to go by what they tell us, I guess. AstraZeneca or Johnson & Johnson's probably going to come out next week, Vaccine Monday, 96%. 96.2%. This is completely laughable. Although, you got more of a bang for your buck last Monday with Pfizer coming out with their announcement, as opposed to this Monday. You still got a bounce, but then we've subsequently been selling off. So what's going on here? Has it always been, now we might actually get something that's going to work, that's effective? Does that mean that there's not going to be any more spending from Congress? Does that mean that the gravy train from the printing press, the Federal Reserve, and other central banks, does that mean that that's going to stop? No, not now, not around the holiday season. What are we going to be thankful for if they take that crap away? I mean, again, this is heads I win, tails you lose. That's what these idiots want. That's what these crackheads on Wall Street want. They're addicts. They want more dope. And Chairman Powell's more than happy to give it to him. He's just waiting in the wings. But just wants a little bit more justification for doing it, for expanding the balance sheet, for keeping those emergency facilities open, the spigots turned to full blast. He needs a little bit of cover. He can get that cover from Congress by passing some more spending legislation, of course, money that we don't have, which is why it gives Jay Powell some cover to start printing the dough, to expand the balance sheet. So he can go out there and he can buy U.S. debt. So he can go out there and buy mortgage-backed securities, residential and commercial. So he can go out there and buy corporate debt. Whether it's investment grade, whether it's junk, doesn't matter. He's going to do it. For global corporations, not just U.S. corporations, don't forget that. And with little to no accountability. And not much transparency either. Another thing with the headlines, because we are in a massive bubble, has been IPOs. This is reminiscent of what took place in the late 1990s, leading up to the tech bust. And don't forget that. That was a decline of 80% from peak to trough with respect to the NASDAQ. So don't think that this can't happen again. Because peak to trough during the Great Depression, you had a 90% decline with respect to the Dow Jones Industrial Average. 50% declines pretty much across the board during the Great Financial Crisis. And we haven't learned anything. We're continuing those same mistakes. Quantitative easing, bailouts. We talked about that yesterday and really the past few podcasts. But the zombie economy during yesterday's podcast, an additional $1 trillion has been added to zombie companies. An additional trillion. So now we're at about $1.5 trillion worth of debt residing on the balance sheets of zombie companies, and this number is getting bigger. Why? Because it's being subsidized by the Federal Reserve through their emergency facilities. Don't worry, investors. Don't worry, corporations. We will backstop everything. And of course, if they lose, the Federal Reserve, is backstopped by us, the taxpayer. Heads, I win. Tails, you lose. What don't you get? It's fine to be upset with poor people breaking into Macy's or Foot Locker on the news when they're rioting. Hold them accountable. I don't like it either. But this stuff of looting our treasury to the tune of billions and trillions of dollars? Come on, folks. This is right in front of you, too. Where's the outrage for this? Where's the discussion about this on Fox, Fox Business, Bloomberg, CNBC? Not there. MSNBC. Where are the bleeding heart liberals with all of these corporate bailouts? Where's Crazy Bernie? Where's Pocahontas? Where are these people? Where's Rand Paul, Ted Cruz, Senator Mike Lee? Where are these people that are supposedly principled, that actually have some overlap? Again, the Tea Party and the Occupy Wall Street, there's a lot of overlap. Where are these people? They're all silent. They're all complicit. 96-0. No votes for America. Don't ever forget it. Because you're paying for it. And future generations are going to pay for it. For a long time. That's the headline economy. Trade, stimulus, vaccine, IPOs, not making any profits. But they got a good story. Of course they do. It's the headline economy. They need a good story. It's the narrative. Well, we're going to make profits eventually. Tesla's going to make real profits eventually. It's like Pinocchio. Am I a real boy? No. Does Tesla make real profits? No. If it wasn't for the grace of government, tax subsidies and credits and whatever the hell else they're doing, that's the only way they show technical profit on paper. But that's it. And of course, with their addition to the S&P 500, you have Tesla up an additional 10 percentage points today, gaining 45 points, trading at about $487 a share. So let's get to some of the market performance here. We have the dollar index trading at $92.45, trading up in the green, but relatively unchanged from yesterday's podcast. Not too much movement across the major pairs, although the British pound to the U.S. dollar is down about 0.2%, as is the same with respect to the New Zealand Kiwi to the U.S. dollar. Overnight futures trading, we have the Dow Jones Industrial Average trading up 0.2%. The S&P 500 is also in the green, up 0.25%. The NASDAQ 100 is flat. Japanese trade is down 0.6%. Across the pond, pretty much an up day all in green, about up 0.5%. And the Australian markets up 0.25%. On the commodity front, we have a little bit of a retreat. WTI is trading at $41.73. Brent is at $44.40. Natural gas is at $2.70. Gold and silver are both currently in the red. Gold is giving back about 0.4%, trading at $1,863 an ounce. Silver giving back about 1%, trading at $24.09. On the debt front, we have Uncle Sam's 10-year junk note yielding 0.86%, so still relatively range-bound from where we were for the past couple of days. But you would think, with Pfizer coming out, 95% effective, you'd be getting out of this quote-unquote safe haven, selling them off, putting prices lower, yields higher. Hasn't been the case. So what memo has the bond market not yet received? Or does the bond market know something that the stock market just doesn't see yet? And that leads us sort of to what I wanted to talk about yesterday, but ran out of time. I wanted to bring up just a brief discussion with respect to gross domestic product, GDP. And this is real gross domestic product, so this is accounting for inflation. Yes, it's the fake inflation numbers that they give us, but nonetheless, we're going to work with it. So, Federal Reserve economic data, where we go all the time for a lot of our research, for a lot of our data that we discuss here. Real gross domestic product. Changed the units percent change from a year ago, and this is seasonally adjusted annual rate, just so you're aware. Obviously, still for Q3, declining 2.9%. But this is well off the lows of where we were for the second quarter of this year at a contraction of 9%. So negative 9% for the second quarter. Just quite astonishing. Quite astonishing. And I think for the fourth quarter of this year, it's going to roll over. I take no pleasure in saying this, but we've done the history. We've done the analysis. The jokers today are acting like the jokers of yesteryear with respect to the Great Depression, implementing policies that were implemented back in the late 1920s, early 1930s that led and created the Great Depression, as opposed to allowing market forces to do what market forces do best. Cure the problem, correct the problem, flush and rid the system of malinvestment. No matter how severe it might be, that is the cure, that is the medicine. The real virus that we have to contend with is debt and easy money and these idiots at the helm. Okay? And as we noted in our book, The Cynic's Guide to Investing, the cure for this is education. People need to understand what's going on. And of course, they don't, because you don't hear this stuff on the mainstream media. That's all by design. This is all red and blue, Republican, Democrat, Coke, Pepsi. You get two choices. Which one do you want? It's fear-mongering. That's all that this is motivation for these people to get out and vote. It's fear that the other party, that the other color, is going to kill you, your children, take your business, burn your cities down. Democrats are deathly afraid of Republicans, and Republicans are deathly afraid of Democrats. At the same time, Republicans think Democrats are snowflakes. Figure that one out. And most Republicans, stereotypically, are the ones that are armed. So figure that one out. But that's the narrative. That's part of the headline country. Not just economy, but the headline country. Not about uniting. Not about looking at seeing what unites us. What do we really have in common? They don't want us paying attention to the man behind the curtain. They want us fighting ourselves, distracted with pointless stuff, crap, 24/7 on these news cycles. Meanwhile, they're running away with all the loot. And talking about running away with all the loot, this is another good segue, because I want to circle around with another discussion we had earlier this week with respect to what President-elect Biden might do with respect to the Treasury Department and a few contenders. Well, one such contender is CEO of J.P. Morgan Chase, Jamie Dimon. And just to remind you folks, because I didn't bring this up the other day, but we've discussed this before. Jamie Dimon is basically the sole survivor from the great financial crisis. He is the only major CEO of a major bank that is still standing. All the others got golden parachutes, resigned. They're gone. They got fired, whatever. Jamie Dimon is still there. But don't forget, J.P. Morgan has been paying some serious fines for market manipulation and other issues. J.P. Morgan is brought up repeatedly within the FinCEN documents. Remember the suspicious activity reports that we talked about? We still got to do a deeper dive with that. I know there's a lot going on. J.P. Morgan's all over the place. They were one of the banks, maybe the bank, for Bernie Madoff, the Ponzi scheme. And they filed reports about this. They knew. But Bernie was making them too much money. That's their problem. He's the con artist. Those people are getting conned. That's their problem. We're doing the same thing with ours. But tongue-in-cheek, maybe Jamie Dimon's the right guy. Right? Because didn't we say jokingly, but again, tongue-in-cheek, maybe only half-heartedly here, just maybe Bernie Madoff should be appointed to be the Treasury Secretary. Because he has experience running a Ponzi scheme. That's what our government's doing. So don't you want somebody with experience on how they operate a Ponzi scheme? Maybe Bernie Madoff should do it. Or, maybe better yet, maybe Bernie Madoff's banker, Jamie Dimon, J.P. Morgan, Chase. Maybe that's what we need. Somebody that has real-world experience running this. As opposed to just all of the other massive manipulators that have been in there. Of course, we've had executives from Goldman Sachs and countless idiots from the Federal Reserve. And another idiot from the Federal Reserve, Janet Yellen, and Lael Brainerd, are both in consideration. At least that's the rumor on the street. It's a revolving door down there. And we got to pay the bill for all of this. Just want you to pay attention. But getting back to GDP, and we'll close off this podcast. You know, obviously, if an economy grows, and this economy has, and gets bigger, you go from 7 trillion to 8 to 9, 10, 11, 12, all the way up 19, 20 trillion dollars, what have you. As you get bigger, it's harder to keep pace. You're not going to grow at 6, 7%. You're not going to grow at 5% anymore. You're not going to grow at 4%. Or at least not too regularly, especially not with these policies that are in place. That's just not going to happen. And that makes some intuitive sense, even mathematically speaking. I mean, real-world experience would tell you, if you just look and listen to some hedge fund managers, once they get to a certain level of assets under management, they cut it off. Because they say, this is too much money to manage. We still want some flexibility. We want to be able to be nimble with our clients' money. You get too big, start to slow down. You can't return. You can't generate those types of returns that maybe you became famous for. So the same thing here. GDP gets bigger. Okay. Of course, in total, 18, 19 trillion. Okay, I guess you can somewhat expect it to be at 2, 3%, 1% even. We can do a lot better than this. We really can. Get rid of regulations. Get rid of the Federal Reserve. Get rid of the federal income tax. I'm telling you, folks, that's it. I'm not here to give you a 50-point plan because I'm not here to run your life. I'm not here to give you a health care plan and every other plan that's under the sun. I'm not here to tell you about education and whether it should be free or whether you got to pay for it. You got to pay for it. This is what the states are for. This is what individuals are for. This is what entrepreneurs are for. This is not what the federal government is instituted to do. And it is collapsing. It is falling apart at the seams. And they are scrambling behind the scenes to keep this thing propped up. At any expense. But it's at the expense of this country collapsing. It's at the expense of this country being in decline. Morally, spiritually, economically, politically, socially. That's not a price we should have to pay. But you need to wake people up. You need to turn them on to the Capital News and other like-minded podcasts. You need to wake people up. because it's more important than just a headline. Stay diversified, stay vigilant, and stay with the Capital News. I am Alex Karitis. Godspeed.